to today's morning report. Charter appraisers with me, Rich Market Analyst at Hantec Markets on Monday, 26th of February. We've got renewed dollar weakness that is starting to come through the markets. We've seen treasury yields which have come off. Treasury yields haven't really sort of driven the dollar recently, but certainly what we have seen is the 10-year treasury yield falling away this morning, Friday and into this morning. In addition to the 2-year as well, and you're starting to see this rally that we've had in the last sort of week or so in the dollar just rolling over now, coming back lower on that dollar index, back sort of 89.5, and it certainly seems as though that the market is sort of regaining a little bit of that dollar weakness that had been seen. Now equities markets have been very strong. We saw a strong move to the upside on Friday on Wall Street. Seen volatility levels according to the VIX falling away as well, and generally speaking that has helped to drive Asian markets higher, but also European markets. But it's interesting to see that the S&P 500 1.6% higher, Dow Jones 1.4% higher, European markets today about 0.5%, and it certainly seems to be a case with the currencies again being a factor in that move, in that sort of underperformance of the European major equities, helped or sort of hindered, I should say, by these stronger sterling and stronger euro. So that's a factor there. We're seeing gold, which is $10 higher. Interesting that we're seeing the oil price, which has started to gain a little bit more traction again to the upside. So looking out for that to play a role, but certainly the dollar under pressure across all the majors today. We've got new home sales for the States later on. New home sales is expected to improve to 655,000 from 625. But the big focus will be on comments of Mario Draghi this afternoon, and also the comments of FOMC member Randy Quarles. Lots of Fed members coming out recently. More comments today from Quarles, and that'll be interesting to see how that affects the dollar this afternoon. But certainly looks as though that the markets are set up for a fairly dollar negative move today. So my chart of the day is Euro Yen. Now the yen has been strengthening against the euro in the last sort of few weeks. We can see that as this shallow uptrend has been breached, and decisively so. Now this 131.15 key support from November got tested on Friday, breached 130.90, but held into the close. But it certainly looks as though the momentum indicators are signalling for further downside. Look at those MACD lines. They are the lowest and most negative since the rally really started kicking off about 9 months ago. But you've also got stochastics negatively configured, and RSI at its lowest again since April. So it really does suggest that the outlook is increasingly negative on Euro Yen. A close below 31.15 would certainly sort of start to trend the market lower, I think, on a continued basis. You'd then start looking at sort of levels such as 130.60 initially, but 129.35 comes back into play as that September low. Lower highs, lower lows, and you've got this 131.15 to 132 area. Basis of old support becomes new resistance. So you'd be looking at using rallies as a chance to sell. And again, you can see that around there, 132 area. Old support became resistance on Thursday. So any sort of selling opportunity I think you can get on Euro Yen, I think needs to be taken. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.